Hey guys, it's a market update. There are two catalysts for Bitcoin coming, and we're going to look at those in this video. The first one is the Bitcoin halving, and the second one is the macroeconomic cycle and liquidity turning, which we can see has a massive effect on BTC. Looking over here on Bybit, this is the 1 week chart. This video is going to be a little bit longer term in what we're looking at, and what you can see here is what looks to me as a consolidation that is forming. We had a great move up, and now we seem to be trying to find support and resistance levels. So a clear resistance at this level, that makes a lot of sense. We've seen this before. This is a very long-term trend right now in terms of this price level between this 15 and 25. So we're in this, but we're trying to find some sort of consolidation level here. We are still technically in an uptrend on the weekly, which is obviously very good. The longer the time frame, the more important that data is. So we're still in this uptrend here, but for me this really is more of a consolidation, where we're coming into this little pocket right here, all the way down to around 21,500 would be, consolidating in this pocket. So for me, this is still actually a good looking chart in terms of if you're hoping the price to go up. Consolidation here is quite healthy to find some support levels before the macro and other factors start to take us in the next direction. If you are a trader though, check out the link to Bybit in the description. Up to $4,000 deposit bonus. If you are a trader, find the details via that link. The Bitcoin price goes up and down with global liquidity. That is central banks pumping money and credit into the system, trying to stimulate their economies. Now, the US isn't doing that for right now, but China is, and we can see this has a massive correlation to the price of BTC. Now, China are doing this, so that's one major economy. When Europe and US also get involved, that is when we have bull markets and Bitcoin flies. And so if you want to get in before that, that's obviously where to trade it. As you can see here, China liquidity in these black boxes, when China starts pumping liquidity into the system, you get this slight lag, and then the price of Bitcoin moves. And that started happening here as well. China started pumping liquidity into their economy, it's trying to stimulate demand, and Bitcoin follows. Now, when Europe and US do this as well, what do we think is going to happen? We have three major economies all trying to boost and stimulate their economies at the same time. As you can see, massive liquidity injection from China here. Bitcoin absolutely at that exact same time started pumping from the bottom. So we follow that through into when will Europe and US start to support liquidity and growth again, rather than what they're doing now. So we can look forward to that. As you can see here as well, we can see the price of Bitcoin is affected by liquidity. Chinese liquidity down at the bottom affects the price of Bitcoin over time. And when Europe and US also get involved with this, which they will, then obviously Bitcoin will start to react as well. So it's really about trying to predict when that will happen and get in front of that. Two big banks are suggesting Q2 or Q3 this year for a recession. I think soft landing is probably out the window if rates stay this high for as long. The Fed really don't want to raise to 6%. If they can just raise a little bit less and see inflation coming down after some hot prints in January, which don't make a trend. The trend is still downwards. And so let's say Q3 for a recession or slowdown. That's what the big banks are saying. As you can see here, the housing and manufacturing sectors are already in recession, and a slowdown in consumer demand would likely lead to an outright recession. B of A's base case, Q3 2023. And this is Goldman Sachs report as well. As you can see, the consensus around Q2, Q3 for that slowdown. Now, that may be priced in, it may not. The market is going to try and front run that recession. And for sure, once the recession hits, and most importantly, if unemployment starts ticking up, that's pretty much the end of it. And you'll see the market actually going up on that, because they will try and forecast the Fed easing and making financial conditions much easier. And if we don't have some sort of widespread banking crisis, actually you won't see a repeat of 2008. That was because of a worldwide financial crisis. And if we avert that, then the recession is not going to be great, but it won't be anywhere near as that harsh, in my opinion. The date of a recession, the extent of it, and if the market actually rallies off of those easier financial conditions without being dragged down further, no one can predict. But what is predictable and set in stone is the Bitcoin halving around 394 days away. It is a number of blocks, not a actual time in the future, and so it's going to be around 394 days. But as we can see, what is the reaction that Bitcoin has after each halving? Well, we've got them set out here. So each blue line right here is a halving. And you can see before the halving, we have essentially a move up into it. Not really much of a reaction on the halving itself, but a little while after, that is when you get the new bull market. And we see that each time. So we get this move into the halving, not much. It is a big move in relation to, you know, what the price was back then, but the real move is after the halving, you get that bull market. So as you can see here, we're fast forwarding, trying to predict this. And we have this now, which really 2023 would be a consolidation year, you know, a build-up year before the halving. And so I'm dollar cost averaging. And as you can see, the blue line here would be the halving itself, looking for that new bull market after that. Now that's for BTC. It's also going to react to the macro. This green box here is where the consensus forecasts are for a recession. Now, usually the market has bottomed before all of that data comes out, because the market looks forward and it's pricing in a recession now, or trying to, and then once the recession actually hits, the market actually tries to price that the recovery in and start to move forward. So once the recession is here, I wouldn't be surprised to see the market actually trying to rally on the back of that, easier financial conditions. But that does depend on how bad it is, and so that's unpredictable. But in this green area would be the potential of the recession and easier financial conditions, more liquidity, which it does boost the price of BTC, plus the halving, which could be in confluence to see us potentially rallying. Is it going to be an new all-time high? I don't know, but that is, you know, the confluence of time and events right here, which I'm looking at, and you've got them on the chart. Get a deposit bonus on Bybit via the link in the description. Come and trade with me on there. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.